Guys, Costco is 218.62. Let's get a whiteboard going here. Stock is 218.60. What's the expected move here, guys? Anyone? Okay. The one-day move today. Okay, if we look here, if we look at let's look at the 220 straddle. Okay, 220 straddle is trading roughly $7.10. Right? 220 straddle, everybody. And it's about $1.20 in the money. So the one-day move is about $6. Okay, the one-day move is about $6. And if we look to Thinkorswim platform here, we can see pretty much right in line. Their expected move to the end of the week is about $7. Okay, 3 days left here. Now, we would normally be evaluating this tomorrow since earnings are after the close tomorrow. It would get us 1 day closer to expiration, which would give us a little bit better of an indication. Okay, but we can look at a move till the end of the week of about $7. Okay, so that puts us at a range of 211.60 up to 225.60. Take a look at this chart here. What do you see here? Anything? Do you see here anything? 211.60 up to about 225.60. Well, you got the 50-day moving average right about 211. And not much to the upside here. Not much to the upside in terms of resistance, really, till we get, kind of way up around 230-ish, 232. We have it hovering right around the 200-day moving average here, which, it hit below there right at the kind of the Christmas debacle and has been slowly recovering ever since. And the 200-day moving average, this blue line, had been significant support for just the longest time here. So, you know, if this thing can hang here, and I know it's, you know, kind of flatlining right now around that 200-day, but if it can hang here, that's some really good support for this stock. I mean, it's right here. It's right here. Hi, Rob. So I look at this here, and if I want to do anything on Costco, even with this recent news coming out of Amazon, this, that, and the other, before looking at any sort of fundamental, which I'm going to do, I'm definitely thinking upside here, just from a technical standpoint here. Let's see what kind of news is out there. I'm looking just offline here for any sort of recent analyst changes, anything like that. Okay, what I see here is just what we just discussed about the 200-day moving average. Not seeing a bunch else. Let me look at one other thing here to see what kind of revisions there might be out there, if any. Sorry, I'm just reading this while I'm talking here. And not seeing a ton. So, we just evaluated 225 on the upper end. First thing I would look at right now would be a 225 calendar. And let's compare volatilities between this week, which we know is, you know, pretty super extended, to next week. Excuse me. And right now that thing is going to cost right about 55 cents. And that's what it looks like. So what do you guys think of this graph here? You know, it's a calendar spread. We look for 1-to-1. What do you guys think of that? Okay, if it stays in our wheelhouse, in our range, then it's obviously fantastic reward to risk. Well, it's great to the positive for a limited range. But let's say we get an extended move to the upside. So we have the direction right to the upside, but just not the magnitude of the move. Exactly, it's the range, like Gus just said. So what I would want to do is, even though we're looking and evaluating the 225 strike right now, maybe we adjust that strike up to the 227 and a half, and let's see what that might look like. Even though it's outside of our expected range, that's okay. Don't need the stock to get all the way there. So this thing's going to cost maybe 45 cents, just a little bit cheaper. Okay. Now I have a break even all the way up to about 234 or 235. So now, excuse me, now I'm protected on the upside all the way to about double the expected move. This I like a lot. This I like a real lot. Now, I want to evaluate an iron condor. Lionel, I said that here we have protection to the upside, which was the problem that we saw in the 225 calendar. We have protection here all the way up to about 234 or so, which is about double the expected move. I mean, how much are we bidding? We're buying this spread. Is that what you're asking? How much are we looking to buy this for? Well, I don't know. Right now, here's the market. 41-cent bid offered at 52 cents. Earnings are not until tomorrow after the close. No need to rush into something like this. I would probably put out a 45-cent bid. Now, I'm not saying I'm putting this out there yet. Don't rush to put this out there, guys. But right now, I would probably put out a 45-cent bid on this thing. Let's go back. Let's go back here and look at an iron condor. Okay, we kind of went in reverse action here with this move of, excuse me, range of 211, 225. So let's look at this and this. Okay. This iron condor is $1.15. Is that good, bad, or indifferent? Let me put this on the whiteboard. Lionel, you're welcome. The 212 half, 210, and 225, 227 and a half iron condor, let's say is $1.15. Break evens are 211.35 up to 226.15. How does this all stack up? Okay, David. Not great, but not terrible. Tell me what is, tell me what's great and what's not so great about it. Okay, close to the expected moves is good. We want to see them outside, which they actually are on both ends. Perfect. David, you got it perfect. Okay. I agree exactly with what you just said. Great break evens. Break even is a little bit better to the downside, a little bit better on the upside, but we're not quite getting that one-to-one reward to risk that we like to see. You know, $1.25 would be right at that one-to-one reward to risk. This is a little light. Excuse me. Okay, the other thing with an iron condor, as opposed to doing a directional spread, I would want to wait till tomorrow to put an iron condor on to get a better starting point of where the stock is, so we could get a better expected range and more accurate strikes. So I would wait to do this till tomorrow. I like the upside call calendar, and I don't mind doing the call calendar or trying to do a call calendar today because we're obviously biased to the upside. Chris, you got it reversed. The reward is only what we take in. The reward is only $1.15. We're selling this thing. So the reward is $1.15. The risk is $1.35. So it's the opposite. No worries, all good. Okay, so here's what I want to do, guys. I don't think we're going to be able to buy the... Man, oh man, this cough is starting up again. I don't think we're going to be able to buy the call calendar for 45 cents today. But you never know. So I'm going to put that out there. If we can get it, great. If not, we'll reevaluate and try and do something else. And then we'll reevaluate tomorrow again and look to see where we are tomorrow also. Okay? So, Neil, are you still with us, man? Because got a signal for you. All right. Let me get that out here, guys, and I will be right back. 227, Paul.